This is your brain on risk. This is Mind Over Money, the podcast where Kevin Cook exposes the psychology of investing.
Welcome back to Mind Over Money. I'm Kevin Cook, your field guide and storyteller for the fascinating arena of behavioral economics. All right, I've got two interesting topics for you today, and it's sort of a different twist than I've done. I just shot a video here at Zacks on a really fun topic for me, and the title of it is The 3 Rules of a Bull Market. And at the risk of oversimplifying, my goal was to crystallize some of my favorite principles into lessons for all future bull markets. And I'll explain that. So the video, I don't even know how long it was. It's probably a good 10-minute video, and there'll be a link to it in the article that goes along with this podcast. I don't know if you're listening on iTunes or some other platform, that's great. Glad to have you. But if you come to the Zacks.com website /podcast, so Zacks.com, ZACKS.com /podcast, and you'll see my Mind Over Money podcast. If you click on that icon, you will see an archive of all my podcasts. And then you can select an individual title, and it'll take you to the article page on our website where, I might have a summary of something unique that's not in the podcast. And usually that's where I'll have links. And what I'll have is a link to the video that I just shot, which you should watch, because I think if you're interested in investing at all, this video could be a piece of timeless education for you or your family, no matter, I say whether you're age 8 or 88, there'll be something in here that will help you understand the bull market that we're in now and how to continue to play it. And it will also help you in any future bull market, I dare say, for the next century. So let me just read a little bit of the article that I wrote for that piece. When I talk to investors about the stock market, I still hear all the reasons that it's time to be cautious and the end is near. But all my experience tells me differently. And while I have often thought this year that the market must be in its 6th or 7th inning, presumably of a 9-inning baseball game, but it could have extra innings, I have few fundamental reasons to believe that it couldn't keep making new highs for another 2 or 3 years. So as I look back at the portfolios and the body of content I've created over the years to help investors profit, I wondered if I could simplify the message even further. I often prefer not to oversimplify, leaning instead toward parsing out the complexities and the nuances of economic matters. But my work does have the same persistent themes. And so I realized I could very easily crystallize them into 3 rules and just 10 words total. In the video that accompanies this article, I go back over some of those messages from the past 9 years of this bull market. Then I summarize them with my 3 rules. My hope is that this video becomes a teaching tool for investors age 8 to 88 because its lessons will certainly stand the test of time in the next bull market and the one after that too. In the video, I also promise some useful links. And that's the bulk of the short article I wrote for the 3 rules of a bull market, which you'll find that video linked again in the Zacks.com version of this podcast. The links I provide there are to a fundamental analysis of Alibaba, symbol BABA. We've been holders of Alibaba for quite some time, over a year now. Very happy with it, and added this year on the dip. And I take a look at some fundamental research about their expansion into the grocery business. So Baba realizes that it's not all clicks. You got to have some bricks too. So they're integrating. So they've got a grocery shopping experience. I believe the store it's spelled HEMA in English. I believe the Chinese pronunciation is something like Hema. So they've created a digital experience where you're shopping with your phone and identifying products and doing price comparisons and getting information, and so they make it you're still in the store, but they enhance the experience digitally. And, it's just part of Alibaba's strategy to, capture Chinese consumers. It's the largest middle class in the world. So I think that explains why part of the fundamental attraction for us as investors. In my video, The 3 Rules of a Bull Market, I highlight a trader who is technically focused, meaning they just look at the charts, and how they just missed a buying opportunity because their analysis told them to buy at $164 in April, and it didn't quite get there. So I said they were sort of pinching pennies for 164 when gifts from the gods were trading at 166, and we were already buyers under 170 there, and now new all-time highs above 205 for Alibaba. Another link I give is a little video. It's a 1-minute video where I also summarize my approach to the stock market, and that should also be a timeless piece of education that you want to show your family, your spouse, kids, grandkids, and teach them to be smart investors. And I shot the video over at the SIBO, the Chicago Board Options Exchange, with Angela Miles. I used to do a Friday segment with her. I got to get back to doing that. That was fun. But she asked me, she wanted a trader's tip, like in 1 minute, what would I tell people? And I'm like, well, I want to go big picture here. And what's worked for me in a bull market is following the smart money, meaning large hedge fund investors who I trust their process, I trust their track record, and I see how they analyze companies and buy stocks, and then how long they hold them. And I'm talking about investors like David Tepper of Appaloosa, or Dan Loeb of Third Point. These, Andreas Halverson of Viking Global Capital, these investors, they do deep homework on companies, and they have extensive research staffs, right, that none of us can have, but you can still follow them. You can find out their holdings, every quarter they have to publish their holdings, and even though it might be 45 days late, you get the SEC 13F filing, at least you know what they're holding and you can see what they do quarter after quarter. But they do deep fundamental homework on companies, and they plan to own them for 2, 3, 4, 5 years during a bull market. They're not swing trading in and out of them every quarter because they want to capture the full potential of what they see as a killer franchise, whether it's something like Salesforce, Amazon, Adobe, Align Technology, makers of the Clear Invisalign dental straighteners, NVIDIA. So I talk about those companies in my video. I reference my video from last summer, the $200 Club, which included Alibaba, NVIDIA, Align Technology, Facebook, and Lam Research, a semiconductor equipment maker. I said those were all in a race to $200. The only one that hasn't gotten there yet is Facebook. I think Facebook has only been up to $195. They've got their own problems. But, early this year, NVIDIA and Align started a new race to 300, and Align got there first. And we took really good profits on Align just recently. I mean, the stock was up 150% for us, and it's made new highs since. Maybe I should have hung on to it. But so sometimes I have these lessons and rules for a bull market only because I've broken the rules so many times. So that's the voice of experience trying to help you out for the long term. All right, what else do I got here? I also give my melt-up recipe that I gave Tracy Reinick on her Market Edge podcast in January. The 3 ingredients for a melt-up that I saw happening were that PEs could go higher because they were under control. This wasn't like 1999, 2000. So even though, some pockets of the market are getting expensive and PE multiples are, over 50 times, maybe 100 times, companies were also growing profits into their multiples. So like a Salesforce, you wouldn't touch it when it was trading 90 times, but then its earnings story keeps ramping up and lowering that PE multiple. Or Adobe. The second ingredient for the melt-up recipe was competition for stocks. There's less stock and more investors. When you understand the institutional framework of the market, meaning hundreds and hundreds of trillions of dollars, literally trillions of dollars, that are earmarked to go into stocks, and these fund managers have a charter to buy stocks. My first 2 rules about the market were from 10 years ago. In 2009, I said the number 1 rule is they have to buy, And the number 2 rule was they don't have to sell. And that's true of fund managers. They have to put that money to work. So you're following them. That's why the market has a natural gravity higher. And then the third ingredient for the melt-up recipe was that there was no global macro worries. I asked, whatever happened to the Eurozone crisis or China having a hard landing? For the first time in a decade, the global economy is in sync and growing at the same time with virtually no economic crisis looming. And this is, we just got over the earnings recession of 2015 and 2016. How many large investors sold and then kicked themselves later? They're like, we're not going to get fooled again. That was an earnings recession. We did not go into economic recession. Thus, the bull market continues and becomes 9 years old. And we're in the second longest economic expansion for that matter, too. It could easily become a 10-year expansion, 120 months, and take out the longest one ever from the 90s. What else? Interest rates. Everybody's worried about interest rates. They're still low and they're going up low and slow. So even though, and you know what the Fed just told us like 2 weeks ago? Jerome Powell said, hey, we're willing to let this go above our 2% inflation target. I mean, that's like the green light for a melt up right there. So I'm not saying buy euphoria. I'm saying stick to the things that work. And the 3 rules, I'll just tell them to you real quick, but you should watch the video. Number 1, buy and hold. You buy and hold these stocks, these great companies. You can swing trade them if you want, but don't get smart and get tricked out of them. And then they go into an earnings report and they ramp up 20%, and then you don't buy them because you're like, oh man, well I can't buy now because a great earnings report just ripped it 20% higher, and then where are you 6 months from now when the stock's 50% higher? That's what happens with these great companies. So that's the first rule of Cooker's 3 rules for a bull market. The second rule is buy what you know. Now, this is sort of a throwback to Peter Lynch, who said buy what you know, 30 years ago. And what he says still works, buy companies products you buy, products you like, products you see your friends using, buy that kind of, where you can see the growth, you see it happening. But I extend this, I expand buy what you know to buy what you're willing to do homework on to know. So and I do a lot of homework. I'm on the company conference calls. I'm reading their reports. I'm reading their presentations. I'm reading the analysts. I try and make sure I know a business as well as I possibly can. And I can't know it as well as the Wall Street analysts. Wall Street analysts, their full-time job is to know an industry and to know companies. And that's a lot of work. That's a lot of number crunching. And you're sometimes putting pieces of the puzzle together to come up with a coherent view. And, I do as much of that as I can to give me confidence in my buys and sells. And then the third rule is buy the dips. And that, that's almost become a joke or a meme in the stock market but it's also puts money in your pocket. I mean, to just, fade the pessimism and, have dry powder or new powder to put to work and be able to buy dips. So again, find this article, find the link, the article for this podcast on Zacks.com /podcast, the Mind Over Money podcast. You'll see the archive, click on the article. You'll get all my links to the videos. And I think I even linked to Tracy's Market Edge podcast where we did the melt up scenario. I'll just close with this. I said, during the Market Edge podcast, when I talked about the melt-up recipe, I said, granted, the market headed into a 10% correction the week after that. But I also warned Zacks Ultimate members about that pullback 2 weeks prior because I saw that the market was kind of going straight up. The Dow was well overbought, and I follow sentiment through something called Investors Intelligence, which is a survey that's been around for 4 decades, and they survey the newsletter writers like myself about how bullish they are. And bullishness had reached a 4-to-1 ratio. Bulls to bears, 4-to-1. It was like a record we hadn't seen since 1987. So that told me, hey, things are getting a little exuberant here. So that didn't mean the end of the bull market. It just meant, yeah, we were due for a pause or a pullback. And that was a time to be buying in February and March. And it was a long, slow correction. It took some time because then we got the whole trade war thing. So the trade war is a risk. Like if this thing escalates and starts barreling out of control and goes tit for tat between lots of different countries, it will be bad news for the economy. I don't think it sends us into a global recession, but it's what's kept investors on the sidelines, but it's actually what gave you an opportunity, gave you plenty of time to get into your favorite stocks if you still had a 2 or 3 year view for an Alibaba, for Apple, for Nvidia, for some of the semiconductor stocks, or even Align. All right, so I'm going to wrap this part of the podcast up right now. I'm going to come back, though, in a minute, and I have a book review for you. It's a new book on the brain, which I couldn't resist picking up. The title is How Emotions Are Made, The Secret Life of the Brain by Lisa Feldman Barrett. And I'm going to give you Cooker's quick 5-10 minute review of the book so far. It's like a 400-page book, so I have not finished it, but it's got some exciting perspective that I want to share with you. All right, I'll be back faster than you can spell reticular activating system. Hey, welcome back. So since this podcast is one of my ways to talk about the brain and behavior more often, in addition to talking about our investing brains, I picked up a new book, and I want to share some of it with you and recommend that you also pick it up because it looks like quite a treasure in terms of learning more about the brain. The title is How Emotions Are Made, The Secret Life of the Brain by Lisa Feldman Barrett. Originally published in 2017, and I'm holding a paperback edition by Mariner that just came out in 2018. And let me read you her credentials first. She has a PhD at a University Distinguished Professor of Psychology at Northeastern University with appointments at Harvard Medical School and Massachusetts General Hospital in psychiatry and radiology. She received an NIH Director's Pioneer Award for her research on emotion in the brain. She lives in Boston. All right. As I said, the text of her book is about 320 pages. And then the next 100 pages are her bibliography, which seems like it's a good 40, 50 pages. And then notes, that's another 30, 40 pages. And then an index. And so when I started reading it, I'm going to tell you that. So I had a negative reaction actually when I first started reading it, and to be fair, I have to give the book much more of a chance because I'm barely 10% through it. Dr. Barrett starts out challenging the 2,000-year-old assumption, which I don't have a full grasp of, but basically she's saying we've sort of got emotion wrong culturally and even scientifically in some cases. I'll just read a little bit here. The time-honored story of emotion goes something like this. We all have emotions built in from birth. They are distinct, recognizable phenomena inside of us. When something happens in the world, whether it's a gunshot or a flirtatious glance, our emotions come on quickly and automatically, as if someone has flipped a switch. We broadcast emotions on our faces by way of smiles, frowns, scowls, and other characteristic expressions that anyone can easily recognize. Our voices reveal our emotions through laughter, shouts, and cries. Our body posture betrays our feelings with every gesture and slouch. She goes on, modern science has an account that fits this story, which I call the classical view of emotion. According to this view, the way... so she goes into a story that I won't get into right now, but she's talking about how somebody responded to a speech where they became emotional just listening to the speaker, and maybe their eyes welled up with tears. And so she's sort of challenging, this idea that emotions are pretty much the same, and we all respond in the same ways, and that it's very definable. And what struck me as odd, is that I never thought that at all. I've read probably 20 books by neuroscientists and gathered what I could, combine that with my own experience to say that, well, emotions are really, we've got this brain full of chemicals. Candace Pert, who discovered, I believe she discovered dopamine. She was a neuroscientist who called our brain and our heads a bag of hormones. So you've got 100 hormones and neurotransmitters swimming around. And she also said that your body is your subconscious mind. Candace Pert coined that phrase, your body is your subconscious mind, to imply that, hey, what's going on with hormones and neurotransmitters is going on through your whole body. And now we get more evidence of that all the time with doctors who talk about the microbiome and how essential what's going on in your gut is to your brain, and how we feel emotions in our stomach and that sort of thing, or elsewhere in our body. So, it's not a stretch to see how your entire body is your subconscious mind. But given that we are equipped for fight or flight and certain types of ecstasy, whether from food or sexual relations, that's the biological inheritance, right? That's what we gain from evolution. Now, what we do with it is humans have culture, right? Which is different than we have very complex culture, which is different than other animals, and language. And so that becomes the overlay for how our emotions come to be. So, yeah, I never thought of like this sort of static well where emotions just come from. They're socially constructed, and that's kind of where, that's exactly where Dr. Barrett goes, is talking about how our emotional repertoire, our field, our experience, they become constructed. And what are the other things we know about the brain that sort of make this obvious? Well, we know about neural pathways and neurons that fire together, wire together. Or is it wire together, fire together? I forgot how it goes. But, the idea being that neural pathways get created by memory, by emotion, by neurotransmitters and hormones that know those pathways. And so that's why significant childhood experiences, especially traumatic ones, become what we call burned in our brain, emotionally and in terms of memory. So to me, that all seemed, like I couldn't help but agree with her idea that, it's socially constructed. But I didn't know we were battling, such a problem that even in science, there was this leaning towards seeing emotions as, this sort of static well that gets drawn upon, and it's the same for everyone. Let me see if I can find another part I wanted to read from her. Yeah, here's another paragraph from the introduction. More significantly, the classical view of emotion is embedded in our social institutions. The American legal system assumes that emotions are part of an inherent animal nature and cause us to perform foolish and even violent acts unless we control them with our rational thoughts. In medicine, researchers study the health effects of anger, supposing that there is a single pattern of changes in the body that goes by that name. People suffering from a variety of mental illnesses, including children and adults diagnosed with autism spectrum disorder, are taught how to recognize facial configurations for specific emotions, ostensibly to help them communicate and relate to others. So I think that where Dr. Barrett is going is she's got, a wealth of experience and knowledge and research, at her fingertips, swirling around in her brain. And so she's trying to expose, here are the actual complexities and nuances, and so much of culture and part of science has been oversimplifying, or, at least our legal system and our medical system could be guilty of oversimplifying what emotion is. So I really like where she's going, and I'm definitely going to give the book its full due, because there's so much in here that I don't even know about yet and how she presents it. So I think she's coming from a place of, there are huge oversimplifications and misconceptions about emotion that actually, hurt society. And we have so much more to learn. So giving her full respect and time for the book, like I said, the the bibliography and the notes alone are nearly 100 pages. But what I also found a little bit frustrating, because I'm a reader who goes to the index because I want to cross-reference. I want to see, I go to the bibliography. I want to see, okay, Damasio. Well, of course, she has Antonio Damasio, who's written several important books because of his research on human emotion. So glad to see he's included here. And then I go to the index because I want to find, right away I'm asking, well, how much does she talk about hormones or neurotransmitters? So I look for dopamine. And in the index, I'm just going to verify this, there is no reference for dopamine. Double checking here. Dogs, Dragons of Eden. Wow, she's got Carl Sagan, The Dragons of Eden. I love that book. So no page for dopamine. Okay, that's interesting. What about norepinephrine? Let's see. I think norepinephrine is also not in here when I looked earlier. Nope, it's not. No reference to norepinephrine. All right. How about, neurotransmitters. It's on one page 281. Okay. So am I, maybe it's just me because maybe I really need to read the whole book, and I will. But my surface analysis is that the book might gloss over, the chemical aspect of emotions and memory. And I could be wrong, but I'm willing to find that out. I still think it's a book you should pick up because it looks like it's just packed with information, and she's a pretty good writer. So I think we have a lot to learn from her. It was one other thing I wanted to say, and I can't remember what it was. I'll just read you the back page, the back jacket, and see if this interests you more. The science of emotion is in the midst of a revolution on par with the discovery of relativity in physics and natural selection in biology. Leading the charge is psychologist and neuroscientist Lisa Feldman Barrett, whose research overturns the long-standing belief that emotions are automatic, universal, and hardwired in different brain regions. Instead, Barrett shows we construct each instance of emotion through a unique interplay of brain, body, and culture. A lucid report from the cutting edge of emotion science, How Emotions Are Made, reveals the profound real-world consequences of this breakthrough for everything from neuroscience and medicine to the legal system and even national security, laying bare the immense implications of our latest and most intimate scientific revolution. I mean, if that doesn't make you want to read it, I don't know what does. And she also, via her notes and her bibliography, she's got an online resource link where you can, I think she may even, you can get expanded notes. So, the notes are 50 pages, and there are, for every chapter and the appendixes. And then she has expansions of notes on an online link specifically for the book. And who knows, she may even have updates and then and make a note of that. So this is a book I look forward to reading, and I will probably come back with new stuff that I've learned in it to share with you here on the podcast. All right, once again, How Emotions Are Made, The Secret Life of the Brain by Lisa Feldman Barrett. All right, thanks for joining me on Mind Over Money, and be sure to check out the video I made, The 3 Rules of a Bull Market. Pass it on to people in your family. If they're confused, hey, leave me a comment on Zax.com or YouTube or wherever, and I'm happy to clarify because I want it to be, I oversimplified for a reason, and I want it to help as many investors as possible. All right, we'll talk to you soon.